Welcome to today's Canary report. Markets are quietly defensive as investors digest a jobs report that came in at plus 57k, half of what was expected, and begin positioning for potential Fed shifts. The Dow's modest gain contrasts sharply with Nasdaq's pullback, suggesting capital is rotating out of growth and into sectors perceived as more resilient. Let's see what our canaries are telling us about where this rotation is heading. Speculative leaders are showing a mixed signal. ARK hovering flat while SPHB drops nearly 3%, indicating some speculative biotech weakness. MAGS trailing down 1% shows mid-cap growth sentiment cooling, but XBI's plus 2.90% surge tells an interesting story. Healthcare speculation isn't dead, it's just selective. Investors appear to be trimming broad speculative exposure while keeping targeted bets on defensive growth niches where earnings visibility remains intact despite macro headwinds. Credit markets are remarkably stable, with HIGH and HYG both within a hair of flat territory, HYGW showing only 0.89%. This stability is notable given the jobs report's softer than expected print. Normally we'd see at least a mild flight to quality in yields. The fact that credit remained contained suggests investors are parsing this data as transitory noise, rather than a structural shift, keeping leverage positions steady and avoiding premature deleveraging. All three volatility proxies, UVXY down 2.21%, VIXY at 1.67%, and VXX at 1.43%, are declining in lockstep with the VIX dropping to 15.81. This synchronized pullback indicates fear is dissipating, not because fundamentals have improved dramatically, but because the market is absorbing the jobs number as a bump rather than a turning point. The tech-heavy headlines, 14 mentions, are dominating sentiment, and volatility traders are pricing in a return to normalcy rather than extended turbulence. The semiconductor sector's 62% decline stands out as the clearest real economy signal. SMH underperformance likely reflects rotation from hardware into software or services where AI revenue visibility is clearer. Small caps, IWM at 0.41, are holding steady while regional banks drag down 1.47%, suggesting credit quality concerns are creeping into the broader economy. Even if overall leverage remains stable, industrials sitting flat and RSP's slight uptick indicate the real economy isn't sputtering. It's just being reweighted as investors prioritize sectors with pricing power over cyclical exposure. Defensive rotation is underway but measured. Gold jumps plus 2.2%, while XLP consumer staples gains 1.97%, showing capital moving into tangible assets and defensive consumption rather than traditional treasuries, which barely move at TLT's 0.6%. This soft safety trade, gold over bonds, staples over utilities, is telling us investors want protection without surrendering all upside. The BLS headline about T-bills beating 40% of QQQ stocks is likely fueling this rotation as yield-hungry capital searches for alternatives to near-zero real returns on fixed income. Today's action reveals a market in careful recalibration. Capital isn't fleeing risk entirely, but rather rotating into sectors that combine defensive characteristics with growth exposure. The jobs report's plus 57k miss-triggered selective derating of high-growth tech and hardware plays while leaving credit markets intact and volatility expectations cooling, with the Dow posting its best first half since 2021. Despite Nasdaq weakness, investors are clearly distinguishing between transitory weakness in cyclical growth and structural shifts elsewhere. Expect continued rotation into healthcare innovation, XBI's strength, defensive consumption, XLP's gain, and tangible assets like gold, while speculative biotech, SPHB, may continue to struggle as valuation compression takes hold. That's your Canary report for today. The market is breathing easier after the jobs number, but that breath is shallow. We are watching for whether this defensive rotation hardens into a broader risk-off move or remains tactical. Stay tuned as we monitor how tech earnings play out over the next week. That'll tell us if the semiconductor weakness was just sector-specific or part of something larger.